What's going on? This is not a trading journal update. I want to talk about the Fibonacci sequence, the Fibonacci tools. If you are unaware, Fibonacci is highly touted in the crypto market. If you listen to any influencers, buy any course, if you're in crypto at all, in the futures market specifically, you're trading perpetual futures, Fibonacci is jammed down your throat. So there's this big question of, do Fibonacci's work outside of crypto? Now that I've gone from full-time crypto to traditional futures, I'm learning the intricacies of differences between the two. And in traditional markets, it seems like Fibonacci's are hated, which is funny because on the crypto side, these guys love it. They love it. It's in absolutely everything. And I will tell you that I've had relative success using Fibonacci in the crypto market, trading futures. I've been profitable consistently, no problem. And it's been a very useful tool. Moving into traditional finance, moving into traditional futures, stock market, spot trading, things like this, I'm finding Fibonacci is not so useful. So the question is, should you use it? Is it worth anything? And this is me brainstorming, trying to figure it out for myself, kind of as I hope to pass this on, because I still see people selling courses about Fibonacci on the traditional future side. And I'm like, man, in my experience so far, it's not worth your time. If you use TradingView, look, fib retracement, trend-based fib, fib channel, time zone, speed resistance fan, trend-based fib time, fib circles, fib spirals, fib speed, resistance arcs, fib wedge, and pitch fan. In my opinion, if you're going to touch any of this stuff, fib retracement, trend-based fib, if at all, and honestly, I wouldn't push anybody to use it at all. Now, this is the DXY, a non-tradable symbol in most cases. And this is the clean shot from where we currently are back to, we'll start at the 24th of October. I'm just going to pull a regular fib, a fib retracement from the low, wick to the high, and then I'm going to pull it over to see where it retraces. Now, in this case, we hit the 618, but I'll call that perfect. A wick that just drops a bit below and immediately recovers to that level. It's a perfect hit. Okay. Try it again. From the high to the low now, blew right past it. In crypto, the guys will then say, oh, well, it's because it was coming after the 786. So we blew through it, but it's catching now support at that 786 level. Crypto people shove this down your throat. Shove it. And there's a reason that it works more consistently in crypto, in my opinion. And that reason is this. If you have a much smaller pool of traders, like you have on the crypto side, versus traditional markets, which is exactly what you have a small niche of people. How many influencers are there to watch? Not that many. I've been in crypto for years. Not that many that are worth watching. All of the major crypto influencers who sell courses, who put out PDF documents, who are active on Twitter, who are heavy on YouTube, they all push fibs. So if the main source of education for crypto perpetual futures traders are these influencers who are heavily pushing Fibonacci, would it not make perfect sense that these retail traders, myself included, are setting buys and sells in correspondence with these levels? Why would it be any more complicated than that, is my question to you. Because people will say, oh, there's all these complex reasons for why Fibonacci's work in crypto and they don't work, on the ES or the NQ or gold or crude oil. I don't buy that shit at all. I don't think it's complicated in the slightest. I think you have a massively tiny pool of traders in comparison to futures on the crypto future side. You have a very small amount of education that is all pushing essentially the same strategies. So you're going to have a very high percentage of the total traders on perpetual crypto futures setting orders at those corresponding Fibonacci levels. I don't think it's any more complicated than that. And I'd be willing to bet. To me, it's a very good risk reward bet that once traditional finance truly melts and combines with crypto, and crypto is no longer predominantly retail traders, I think fibs will become just as useless as they are in the traditional financial sector. And I say that with a bit of variation because there are scenarios where Fibonacci works, quote unquote, in traditional markets. In the QQQ, for example. In the SPY, for example. Low to high, 50% retracement. High to low, 618 retracement. Texas Roadhouse. I thought this was real interesting. From the low to the high, you had a perfect retracement other than this was COVID. So it was a big push down, but close enough. Then boom, boom, low to high, 50% perfect. Low to high, 50% perfect. So you do see them, but high to low, 618 retracement. Here is a good example of absolute failure. No matter which way I pulled it, it just failed, 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 and failed. This is the spider, the SPY. So there are these scenarios where Fibonacci seems to work, and it seems to work relatively well on larger time frames. In all of my testing, from the hour down in the ES, crude oil, gold, NQ, all the major futures trading contracts, I personally have found it to be almost worthless. Almost worthless. Still, zoom out, go 4 hour, go 12 hour, go daily. In my experience, I was able to find more. So it looks like traditional markets, for what most of us future traders are doing, Fibonacci is something you should not even touch. Unless you are swing trading, which most people who are going the funded route are not able to do. Most of us are doing scalping, super scalping, very quick and announce. I think Fibonacci is absolutely worthless in those scenarios. I think if you are investing, buying stocks long term, buying crypto long term, and even crypto shorter term, but specifically investing longer time frames, I think Fibonacci becomes a little bit more valuable. Still, I think you should go with whatever your strategy is. If the setup qualifies as a trade from the perspective of your strategy, then maybe it's interesting. Maybe it would add a little bit more confidence if it just so happened to line up with either the 50% mark, 0.5, or that 0.618 super magical unicorn number. But only if the setup already qualifies as something that you'd be willing to get into with some degree of confidence. If it doesn't, but then you start playing fibs and you get a perfect 618, personally, I'm not taking that anymore. In crypto, I might have, because I've had relative success with it. In traditional futures, I'm not ever going to. I don't see that it's successful at all, really, at all. So larger time frame investing, traditional finance, in my personal opinion, Fibonacci is more useful. Still, I would never use it as a standalone for anything at all, ever. Futures trading, specifically, if you're trying to get funded, if you're going the funded route like I am, useless. Don't touch it. Leave it alone. If you can prove me wrong, I'd love to see it. But I've done a good amount of testing. No go. Especially as somebody who used it heavily. I've had to pull myself out of the habit of pulling fibs. That's how much I don't believe in it now. When I trade crypto, no problem pulling fibs. I'm still going to do it. Because for now, I find those levels are still respected. To me, it's not a matter of whether an indicator works or not. Even in general, it's a matter of, does the indicator work in that market in that time frame? To me, and maybe a month from now, I'll make another video and be like, yeah, I was dead wrong. Here's 100 times where it worked in one day, super scalping. But I don't see that happening. I went real far back. I've been forward testing it as well. It does not seem to add value to traders who are trying to get funded through a prop firm because of the confinements of how you have to trade. You have to be in and out. You have to be scalping in most scenarios. I don't find it useful. Investing, crypto, I'd say for the time being, use it till it breaks. But I think once all the algorithms really come in, once the big money really comes in, I think it'll become just as invaluable. I'm sorry, just as not invaluable. It's not the right use of that word, is it? It will become not valuable. How about that? It will become not valuable. So use it until it breaks. Because right now in crypto, it works. I wouldn't touch it anywhere else, really. But if you're interested in buying some Texas Roadhouse, that shit adheres to the 50% like it's magic. Just a little tip, not financial advice, of course. I'm broke. Don't listen to me. I think that's it. Good luck. Don't use the Fibonacci. Don't just avoid it. Just avoid it. Unless you're doing crypto and then, do it till the banks come in. Have a great day.